Inflation pressures appear muted after a rise to start out the year. The Producer Price Index, which measures prices that businesses receive from customers, was unchanged in May as energy costs recorded their biggest decline in more than a year. The prices were flat from the prior month. They did advance nearly 2.5% from a year earlier. And that report on inflation comes as Federal Reserve policymakers meet to discuss the direction of interest rates. A decision is due tomorrow. And it's something that investors, money managers, and economists will be watching closely. And Steve Liesman surveyed them to get a sense of what they think about the Fed and the market.
The CNBC Fed survey ahead of the Federal Reserve's meeting shows 100% of our respondents expect a Fed rate hike tomorrow at the meeting. 54% say that third rate hike this year will happen in September. And 64% say the balance sheet will begin to decline by December. That's quite a bit earlier than was believed earlier this year. Looking at the outlook for the Fed funds rate, you can see the three rate hikes in there this year up to 1.4%, 2.1% in 2018, and then a little bit more modest in 2019, leading up to 2.8%, which they believe is a terminal rate. And that's just a bit below where the Fed's own forecast is for 2019 and for the long run. Kind of pessimistic, though, when it comes to the stock outlook. 24.29 is the current level, going up to just 24.42 for the rest of this year. So they think most of the gains are in this year, but a little bit more for end of 2018, up to 25.62 or 5%. But some optimism as to the reasons why stocks are at current levels. Earlier this year, 82% thought it was expectations for fiscal policy from the new Trump administration. That's come way down, just 29%. 63% now believe that what's underpinning markets are economic fundamentals and earnings. Now, when it comes to the outlook for growth, that's come down a bit, in part because they factored out policy expectations. Was 2.5% in January. It's come down by a quarter point to 2.25%. For 2018, it was 2.75. It's now 2.45%. And you can see the reason in the next graphic. How much growth was factored in from policy stimulus? It had been a quarter point, almost all gone for 2017. 40 basis points was factored in from Trump policies for 2018. Now that's just 0.2%. And what that reflects is an expectation that if there's going to be fiscal policy, it's going to happen next year, not this year. For Nightly Business Report, I'm Steve Liesman.